Taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Well, the Rand was the top performer on the day yesterday amongst the 20 global emerging market currencies. And initially, we had some support coming through from the finance minister's comments saying that South Africa could use its forex reserves if necessary to relieve market stress that's been caused by global turmoil. What have you made of the markets right now, and how are you assessing, the levels or the holdings that we've currently got in place and that it would adequately cover the country's foreign obligations moving forward?
Morning, Alishia. Yes, the Rand did enjoy some additional strength yesterday, and much of it related, as you mentioned, to the finance minister's comments, but also it was boosted by sentiment emanating from expectations that the Eurozone debt crisis does seem to be reaching some sort of conclusion, or that rather that lawmakers in that region are closer to reaching a permanent solution to that problem. So it was a combination of factors really that boosted the Rand yesterday. But to return to your question about reserves, it was quite interesting to hear the finance minister make those kinds of comments. Certainly South Africa is in a far better position as far as its reserves are concerned than it was in the last market crash of 2008. At that point, the gross reserves stood close to about $30 billion, and they're currently closer to $50 billion. So certainly we're in a much better position than we were at that stage. But nevertheless, when you look at South Africa and compare it to other emerging markets, we still have quite a small reserve holdings of dollars. So it was quite a surprise to hear him articulate those kinds of statements.
Of course, we've had some encouraging economic data filter through, and that on a day where we've seen, the finance minister say that the country is willing to act if needs be. Manufacturing production numbers coming through quite encouraging, where it was expected to have contracted by 0.9%. It actually increased by 5.6% year on year in volume terms. What are you making of, or what have you made of those numbers, and the sustainability that we're likely to see of that kind of progress?
Well, the fact that the numbers came out better than expected yesterday and kind of coincided with an improved market sentiment anyway kind of helped the Rand. But as far as the sustainability of these numbers, we think that it's more of a temporary blip than evidence of a sustained improvement in manufacturing production. You'd recall that in July, manufacturing output contracted quite sharply. That was partly related to the strikes, but in our view, the strikes were not the entire reason. Clearly, there's some underlying weakness evident in the manufacturing sector, and these numbers did nothing to dispel that view did nothing to dispel Standard Bank's view in that regard. So as far as the manufacturing sector is concerned, it still looks under pressure, and we expect that on the whole, Q3 numbers will probably be a drag on GDP, much as they were in Q2.
What about mining data? We're anticipating those numbers later today as well. What are you anticipating on that front?
Well, we've also penciled in an increase in mining production for August, and that's also on the back of a sharp plunge in July that was related to mining activity. So what we're expecting to see for the August numbers is really a return to normality as far as the mining sector is concerned, but it's also under pressure, and so we're not expecting that there's going to be a sustained pickup in production numbers from this point onwards.